as things stand right now, we know that the housing market is slowing down. Just how much further could it slow down in 2023?
Yeah, definitely. And great to be with you again. Of course, it could slow down further. We are going to be looking to what the Fed is going to do. We're going to be looking at what's going to happen in labor markets as well. I think right now we could also be looking at a theme of slowdown to moderation. And what I mean by that is something like the Case-Shiller index, we were looking at it slowing from 9.2% to 8.5%. But at an index level, that's going to be moderation month to month. And so that'll be sort of the first indication that maybe we're working with this theme of moderation.
Now, we've seen some of the data come out recently with regard to housing starts and building permits. Now, we know the caveat here is those are often very volatile numbers, and they can jump around month to month based upon things like weather. But what can you read into the near-term trends that we've seen in things like housing starts and building permits? Are we still going to see any kind of a slowdown further out because of the lack of activity in some of those parts of the market?
Well, so single-family starts have certainly slowed down, and that's expected with what happened in mortgage rates over the last 6 months to a year. Housing starts for structures with 5 units or more had been shockingly strong despite Fed rate hikes. It's really only in the recent data that we've started to see that come down. That data in general is showing that the U.S. is still supporting housing, maybe more housing than we thought was going to be the case. And I think when we look at the amount of housing under construction that we're looking at, basically a little too much in the pipeline. If we click over to home builders, we can look at them. They're a lot more positive. They're talking about cancellation rates finally coming down. They're talking about traffic being somewhat normal. So while they're a little bit positive, I think if we look at how much is under construction, it's still a little bit to be concerned about.
Now, the inflation story, the inflation narrative over the last several months and quarters, a lot of that has centered on food and energy. That's come down quite a bit in certain parts, but real estate and rents specifically, it's a big deal. Can we expect some of those rent rates and some of that growth in rents to start slowing down as well because of the overall housing slowdown?
Yes, and so we are seeing annual rent growth, for example, slow down, particularly on the new lease side. Now, when that data does flow through into, say, more timely measures that are used in the CPI, we should see that contribute to a slowdown in CPI inflation. The Cleveland Fed recently put out a great paper on this, where basically they updated the methodology by putting in a new lease rent growth index that basically shows that inflation is actually slowing down faster than one would think than if they're just looking at shelter inflation and owner's equivalent rent.